Subscribe our channel eFinance Management and click on the bell icon to get update on new videos. Today we are going to explain investment objectives and investment constraints. Investment objectives are related to what the client wants to achieve with the portfolio of investments. Objectives define the purpose of setting the portfolio. Generally, the objectives are concerned with return and risk considerations. These two objectives are interdependent, as the risk objective defines how high the client can place the return objective. The investment objectives are mainly of two types: risk objective. Risk objectives are the factors that are associated with both the willingness and the ability of the investor to take the risk. Second objective is return objective. The following steps are undertaken to determine risk objective. Specify measure of risk. Measurement of risk is the most important issue in portfolio management. Risk either measured in absolute or relative terms. Investors' willingness. Individual investors' willingness to take risk is different from institutional investors. For individual investors, willingness is determined by psychological or behavioral factors. Investors' ability. The ability of an investor to take risk is dependent on financial and practical factors that bound the amount of risk taken by the investor. The following steps are required to determine the return objective of the investor. Specify measure of return. A measure of return needs to be specified. It can be specified in an absolute term or a relative term. It can also be specified in nominal or real terms. Desired return. A return desired by the investor needs to be determined. The desired return indicates how much return is expected by the investor. Required return. A return required by the investor also needs to be determined. A required return indicates the return which needs to be achieved at the minimum for the investor. Specific return objectives. The investor's specific return objectives also need to be determined so that they are consistent with his risk objectives. An investor having a high return objective needs to have a portfolio with a high level of expected risk. Investment constraints are the factors that restrict or limit the investment options available to an investor. The constraints can be either internal or external constraints. Internal constraints are generated by the investor himself, while external constraints are generated by an outside entity, like a governmental agency. The following are the types of investment constraints: liquidity, time horizon, tax, legal and regulatory, unique circumstances. Liquidity. Such constraints are associated with cash outflows expected and required at a specific time in future and are generally in excess of income available. Moreover, prudent investors will want to keep aside some money for unexpected cash requirements. Time horizon. These constraints are related to the time periods over which returns are expected from portfolio to meet specific needs in future. An investor may have to pay for college education for children or needs the money after his retirement. Such constraints are important to determine the proportion of investments in long-term and short-term asset classes. Tax. These constraints depend on when, how, and if returns of different types are taxed. For an individual investor, realized gains and income generated by his portfolio are taxable. The tax environment needs to be kept in mind while drafting the policy statement. Often, capital gains and investment income are subjected to differential tax treatments. Legal and regulatory. Such constraints are mostly externally generated and may affect only institutional investors. These constraints usually specify which asset classes are not permitted for investments or dictate any limitations on asset allocations to certain investment classes. Unique circumstances. Such constraints are mostly internally generated and signify investors' special concerns. Some individuals and philanthropic organizations may not invest in companies selling alcohol, tobacco, or even defense products. Thank you. Please subscribe, like, and share our video.